Hey, my name's Ian Rogers. I'm the Chief Experience Officer at Ledger, and you are watching Taking Stock.
You've heard of the Santa Claus rally here on Wall Street. We might as well start calling this the turkey trot, because for the third consecutive session, the S&P 500 expected to finish the tail of the tape in positive territory for this shortened holiday trading week ahead of Thanksgiving. 3 sessions in a row in the positive win category. We are now up almost 4% from where we closed Thursday's session, that wildly volatile session here on the street last week, and only about 2% or so off of our all-time highs. Usually on a day like today, we're seeing tech and discretionary do the heavy lifting. Technology shares, at least for today, taking somewhat of a backseat. This newly emerging proxy fight between Alphabet and NVIDIA. Man of the people, Phil Rosen, is on deck from Opening Bell Daily. He will join us right after the bell. We'll talk all things Alphabet, NVIDIA, Fed, and much more here on the day. Volatility in retreat for the third consecutive day, with the VIX reaching its lowest level since November 13th. That and much more sets the stage for today's show, and welcome to it. You're watching Taking Stock. I'm your host today, JD Durkin. Mere moments away from the ringing of the truly iconic closing bell, Boston Omaha and the Epilepsy Foundation here at the NYSE, set to do the honors. And the team here excited to bring about a close to the trading financial markets. And one last time before we wrap, the crowd goes wild at the New York Stock Exchange. A winning session here on Wall Street among the sectors catching a bid on this trading Tuesday ahead of Thanksgiving. The major airlines, the banks, healthcare, biotech stocks, the home builders, and the retail giants all up in positive territory. Let's say hello to the man himself, our good pal, Phil Rosen, co-founder of Opening Bell Daily. Join us here at the New York Stock Exchange. My man, welcome here.
Thank you for having me.
What a day, what a crowd.
It's unbelievable.
What a day for these markets more broadly. What's on your radar? The S&P. So, I mean, it doesn't feel this way. We're only like 2.1% off the all-time high. We've had a really nice rally here the last few sessions.
I'm sensing a record high coming very soon, and Google is going to be the thing that powers us there. We're seeing a tale of two AI heavyweights right now. It's Google, it's NVIDIA, and NVIDIA's been the hottest headline all year, but Google has pretty much come in, and the market is showing us that it thinks Google is the next AI winner, or at least today's AI winner.
Yeah, it kind of seems like the market right now is saying there can only be one. Are suddenly things a little bit more adversarial between Alphabet and NVIDIA, even though Google is one of NVIDIA's, ironically, biggest customers, but they're also doing competition with one another.
Yeah, everyone talks about the K-shaped economy. We're seeing a K-shaped AI race right now, and NVIDIA has been pretty much down, I think, 10% in the last 30 days, and Google's been up 20%. So that's a 30% disparity. And really what we saw was the new Gemini model from Google has been blowing people away. I used it. It is unbelievable. And NVIDIA, they're trying to figure out how to compete with Google's newer and cheaper chips that maybe Meta's going to start using. We don't know how much credence to give those reports. I think the information reported it. But if all these companies start turning to Google for other chip alternatives that are more economical, maybe NVIDIA is going to see some tough times at the edges.
Can I get your perspective on Gemini 3 a little bit more? Because Mark Benioff from Salesforce said, I've been using ChatGPT for years, played around with Gemini 3 for a couple hours, totally blows out ChatGPT. What was your experience using Gemini 3 that might help explain why we're seeing the AI trade so front and center here the last couple days?
So the new Gemini model has something called Nano Banana on it. It's been there for a while, but they updated it. And I gotta tell you, JD, it is unbelievable. I used it all weekend. The photos, the videos, the speed of all of this, it does blow out OpenAI's model. And I've been using OpenAI a long time. It is nothing compared to the new Gemini.
We're a couple weeks out from the next Fed decision. I do want to get your take on some news we heard out of the White House today. Treasury Secretary Scott Bessent saying a very good chance the president makes his pick for the Fed before Christmas, what's on your radar for the FOMC, either for the decision in December or this idea of maybe a bit of a shadow Fed chairman being announced before Jerome Powell's term officially comes about to a close?
Yeah, this is the hottest topic going into the new year. If we get a new Fed chair before Christmas, we're going to get lower rates probably faster than we think, because they're going to do what Trump's been calling for months at this point. He's been calling for 300 basis points of cuts, and we're not going to get that all at once. But if we have Trump's appointee come in, whoever it may be, I think Kevin Hassett is the front runner, rates are coming down and asset prices are probably going up.
Yeah, we saw 85% odds now in the minds of market participants at the CME Group for a December cut. Does that jump surprise you? Because this time last week, the odds were telling us a way different story.
So a few weeks ago, I saw Dan Ives. He was saying that there's a better chance of him playing in the NFL than them not cutting rates in December. So Dan's a lot smarter than I am. I'm going to take his word for it.
He's also a very good athlete, though, to be fair. So
That's
you never
true.
know how
This
things are
is
going to play
true,
out.
yes.
Before I let you go, you're always one of my favorite guests. Anything else top of mind for you for the broader markets you think we should be paying a little bit more attention to here for this holiday week, Phil Rosen?
I think the story of NVIDIA versus Google, it's very compelling in the moment, but long term, neither of them will end up losers. They're both going to be kings of the AI world, kings of the AI trade, and trying to pit them against each other, it's great for headlines. It doesn't make any sense because they're both going to be top of the world.
A king for taking stock himself, the great Phil Rosen, co-founder of Opening Bell Daily, man of the people, one of my truly, truly favorite people, personally and professionally. My man, thanks for being here.
Thank you.
All the best for Thanksgiving for you.
Thank you, likewise.
Thanks for joining us. We'll do it again soon. Josh will grab your mic. Todd, you and my man, you and I are going to head for a walk this way. Hi, everyone. Welcome. Did everyone have a great time at the Bell today? That's what's most important, Todd. We're going to walk back this way. Quick earnings spotlight. We'll talk BBY, that's Best Buy. Having a killer day today, shares up 5% on the day after the company boosted its full-year revenue forecast to just under $42 billion. Adjusted EPS of $140 versus the street's expectation of $131. Just launched Best Buy Marketplace the last quarter. Now you can buy items from a third-party seller. The stock's still down 7% from the start of the year. Todd, two NYSE notables before we toss to break. We'll take a look at shares here at XLY. That is consumer discretionary on the day. This is the hallmark of the risk-on trade. Peak to trough last month, we saw discretionary stocks fall 9%, but they have since made back a lot of that gain. We'll see how cautious the U.S. consumer is as we head into the heart of the holiday shopping season. Last year, XLY rose 6% between Thanksgiving and the end of the year. We will see what happens with discretionary stocks in the same time period after this holiday break until the start of 2026. And finally, Todd, we'll take a look at shares of Hormel Foods, appropriately so here for Thanksgiving. This, of course, is the parent company of Jenny O's Turkeys, also the company behind Skippy's and Corn Nuts and a handful of others you may love around the holidays. Up today, but still down 26% year to date. A huge miss on earnings last quarter sent the stock spiraling down more than 13%, trying to make up those gains. Hormel is set to report quarterly earnings once again on December 4th. We will see what Hormel has in store. The New York Stock Exchange's very own Ashley Mastronardi sat down with Nathan Zhu of Cloud to discuss how their wearable tech is revolutionizing the world of transcription and so much more. Have a look.
Plot is a company that makes tiny AI-powered devices that some say enable super juiced-up note-taking. Joining me now to share more is Nathan Zhu. He is the co-founder and CEO of Plod. Welcome to the New York Stock Exchange.
Yeah, thanks, Ashley. Nice meeting you.
So, what are these devices?
Well, these are, AI note-taking devices that is able to capture conversations for both in-person and, phone call conversations, where we have equipped the devices with the most powerful microphones. And also we have strong battery life, recording distances, so they are able to, capture conversations in versatile situations. And after that, we would be processing the audio with transcription and also summarization capabilities that eventually they will generate a really powerful and insightful summaries for these meetings.
All right, so I understand that this one can attach to your phone or potentially another device, and this one attaches, like you have it, onto...
Yeah, it's a wearable device.
It's a wearable device. So can you walk me through, if I am having a conversation with someone or a meeting, how, we'll start with the wearable device, how would that process work? What would that look like? And I understand you have an app also where you can see all of this information.
Well, I think I would prefer to start with the setting, right? Let's say for lots of professionals who work on the go, very often they get to talk to the clients or patients, etc., to to try to understand each other and exchange ideas. And what most often happen is they cannot remember all the stuff they have talked about, and also they may not understand each other that well. So with these devices, when they have the microphones, they are able to accurately capture the conversations with high fidelity, and also we have noise cancelling features that are able to capture the audio really with powerful clarity. And after that, we would have the AI transcription that accurately transcribes the conversation into potentially over 100 languages, so that you would have the meeting minutes. And after that, we'll be summarizing the conversation with. We have over 3,000 templates that have been contributed by over 1 million Plot users who are experts in different sectors. And so we're able to process the transcript and summarize the conversation into structural, insightful either summaries or action items. And later on, we are even able to incorporate large language models to be able to have ask features such as Ask Plot. We are proactively suggesting questions or insights that you may not have realized without solutions like Plot.
All right, and Plot has grown from 25 to more than 350 employees and more than 1 million users. What do you attribute that growth to, and where do you see it going?
I think we have had the best product market fit for large language model, and how large language model is able to help people elevate productivity and performance. Because again, the way we see it is our work starts from conversations, and we would have lost lots of intelligence if we're not having any available technology to help us capture that. By developing these AI note-taking devices, we are able to have almost 100% of that memory, and then leverage the large language models to either summarize or generate action items, to-do list, and even large language models are able to provide insights that you wouldn't be able to think of.
All right, so Nathan Hsu, co-founder and CEO of Plot, thank you so much for joining us at the New York Stock Exchange.
Yeah, thank you, Ashley. Yeah. Nice talking to you.
Welcome back to the show. You're watching Taking Stock live from the iconic trading floor of the New York Stock Exchange. Time now to bring you the latest headlines you need to know in the world of fintech, crypto, and artificial intelligence. First up at this hour on this Thanksgiving Tuesday, the crypto majors Bitcoin, Ethereum, Solana, they're all down multiple percent as the weekend rally continues to fizzle out. Bitcoin currently trading at 87,138. Next up, the CFTC has formally approved Polymarket's return to the United States. Ah, yes, allowing the on-chain betting platform to operate as a fully regulated exchange after a 3-year ban. And finally, Klarna unveiling a new USD-backed stablecoin called Klarna USD. It's built on Stripe and Paradigm's Tempo blockchain, aimed at slashing global payment costs for its 114 million users. FinTech TV's Remy Blair caught up with Barrett Nelson of the American Farm Bureau Federation to discuss why the Thanksgiving holiday may be a little bit more expensive this year. Take a look.
Welcome to FinTech TV. Thanksgiving shoppers may want to budget a little extra this year. New analysis from the American Farm Bureau says wholesale turkey prices are up about 40% from last year. Now, economic pressures and poultry diseases are pushing costs higher even as supplies remain steady. Prices are still 32% lower than 3 years ago, but farmers are facing rising supply costs, trade issues, and continuing disease risks. Well, joining me this morning to weigh in is Barrett Nelson, economist at the American Farm Bureau Federation. Barrett, thank you so much for joining me. So the countdown to Thanksgiving is on. So how much higher will retail turkey prices be at the grocery stores?
It is that time of year. As we start getting into fall, Thanksgiving right around the corner, that means the top of mind thoughts are switching to food for the holidays. And turkey is really top of that list. We've had a lot of disease pressure this year. prices at the retail level are up around 40% compared to what they were last year. They're sitting at around $1.31 and a half a pound on average. Now this is up, like you said, about 40% from last year, 32% from just a few years ago. And I think that shows just how volatile a lot of this market has been for our farmers and our producers that grow our nation's food. This disease pressure has caused an upswing and a downswing and an ebb and flow of the supply of turkey. And that's what's behind a lot of these changes in price for our shoppers. If we compare this price to last year, we look and we can see that we're at $1.31, 40% from our 93 cents a pound last year.
Well, over the past 30 years, U.S. turkey production has declined while demand has only slipped slightly, making supplies tighter and driving up farm level prices. So how are the poultry farmers handling this?
It's really been a tough road for our turkey farmers. If we look back to where we peaked in turkey production, we're looking at around 303 million back in 1996. Today, we're sitting at turkeys raised at around 195 million birds this year. So down just a little bit from last year. But if we look at these long-term trends, we can see that consolidation in the industry. We think about the impacts of avian influenza. We've had about 175 million total poultry animals affected by this virus. About 19 million of those have been turkeys. In the last month, we've seen over 600,000 turkeys impacted by this virus. And so when we think about that and how that affects our farmer and his supply, when this happens, it's devastating on the farm level.
Key question here, could the price increases extend beyond just turkey to other Thanksgiving favorites this year?
American Farm Bureau Federation is a long-standing tradition. What we do is we conduct a survey for the cost of a Thanksgiving dinner for 10. And you can keep an eye out for this as it'll be coming right around the corner in November for the release. In this, we'll have your favorite items like pumpkin pie, mashed potatoes, all the fixings that come with that lovely centerpiece that we all like so much. So keep an eye out for this. You can get a snapshot on what that might look like as you head to the grocery store.
Thank you so much for joining us today, and thank you so much for sharing all of your insights and perspective.
Thank you.
Let's do it one and all. Welcome back to the broadcast. You're watching Taking Stock live from the New York Stock Exchange. Today in the world of startups, raises, and rounds, and news you need to know on this Tuesday. First up, Jingdong Industrials, the supply chain arm of JD.com, preparing a Hong Kong IPO that could raise up to $500 million as early as next week, according to a Reuters report. Next up, Revolut completing a secondary share sale valuing the fintech at $75 billion. It's a 76% jump from last year and one of the highest private valuations in Europe. And finally at this hour, nuclear startup Maritime Fusion raising $4.5 million to build a tokamak fusion reactor on a ship. It's a bet that fusion power could go to sea before it hits the grid. Time now for what is always my favorite part of the show, when I get to talk with not just a spectacular guest, but someone who just rang the iconic closing bell. Say hello to Bea Martin Lee. She is the CEO of Epilepsy Foundation of America. Thank you for being here.
Oh my goodness,
congratulations.
thank you.
And thank you for bringing like the greatest group.
Weren't
What
they the
tremendous
best?
energy today.
Weren't they the best? The epilepsy community is like no other.
Can I ask you what the experience was like, not just to have over 100 people from the community down here as enthusiastic and passionate
Yes.
as they were, but to ring the closing bell with us today?
You know, I'm an individual living with epilepsy as well. So to be able to bring that visibility to our community, outstanding, absolutely outstanding. It is literally a bucket list item for me. So thank you so much for having us.
What would you most want the average person watching who might not be too familiar with your work at the foundation to really know about the community?
Sure, our vision at the Epilepsy Foundation is so no one faces epilepsy alone. We are here to stand by every individual, all 3.4 million in the United States who live with epilepsy, to make sure they have the tools, resources, and support to live their best quality of life.
I know you have an exciting new tool for episode management called Sage. What's it all about? How did it even come together?
Well, Sage is our empathetic AI assistant, and it lives on epilepsy.com. And we partnered with AWS to design this tool to make sure that information was at the fingertips of every family looking for information, whether it be 2 o'clock in the morning. They can come to Sage and ask any question that they need and get highly qualified advice from our clinicians.
We talk a lot about artificial intelligence here on the show. I admit this is the first time I've heard of empathetic AI.
Yes.
Talk to me more about what that means in the partnership with AWS.
Sure, when we say empathetic, it gives advice without judgment. It is there to support and to encourage and to respond in the tone of the question. So again, it's there to make sure that no one faces epilepsy alone and that you feel like you have a companion. Remember, it's not there to replace human connection, it's there to enhance it.
What does the Empowered Data platform look like for users and members of the epilepsy community? Bea?
Sure, Empowered is our new data platform meant for patients to collect lived experience, to spur innovation, and to make sure we're giving insights back to our community. Right now, it is there to fill the gap between what pharma needs from our patients and what our patients are able to give from their lived experience.
What do you most hope the future brings both for patients and for clinicians in the space as well?
You know, what we hope is that there is a standard of care. Right now, in the world of epilepsy, there is not a standard of care, meaning it depends on your physician and your healthcare system on the type of care that you receive. Our goal at the foundation, along with our clinicians and our patients, is to make sure that there is a standard of care across America.
Talk to me about what is on your radar and things that most excite you as we soon enough turn the page to 2026, Bea.
Yes, well, right now we are in the middle of NEAM, which is National Epilepsy Awareness Month. And starting next January, we will do the 1 in 26 campaign. Again, 1 in 26 individuals live with epilepsy in the United States. So next year, starting on January 26th, you will be able to participate in the 1 in 26 campaign.
That's amazing. Finally, before I let you go, talk to me a little bit more about what the Thanksgiving holiday, the heart of the holiday season, means to not just you and your family, but the broader community that I know you are so proud to represent here today.
I absolutely am. You know, during this Thanksgiving season, again, it's all about gratefulness. We are grateful for the progress that our community has made and also for the things that are coming forward. So thank you again for having me today. This has been awesome.
And it's been
so exciting.
A huge privilege for the New York Stock Exchange to have you as well. That is Bea Martin Lee, CEO of Epilepsy Foundation of America. And congratulations on all the tremendous work. Thanks a lot for being here with us
Thank you
today.
so much for having me.
It's great to have you. Folks, don't go anywhere. Much more Taking Stock coming up after this, including the latest from Money 2020's Scarlett Sieber. Stick around. Welcome back to Taking Stock from the trading floor of the New York Stock Exchange, and now Money 2020's very own Chief Strategy Officer, the great Scarlett Sieber, throws it all the way back to 1999 with a GLBA breakdown. Take a look.
Welcome back. I'm Scarlett Sieber from Money 2020, and on this segment of Hindsight 2020, what we're doing here is we're proving that history doesn't just rhyme, it sometimes also drops that bass. This week, we're rewinding to November 12th, 1999. We've done the Y2K dance before on this show, but this time we're going to take a little bit step further. Y2K panic was trending, boy bands ruled the charts, and Congress decided to give up the financial industry a real glow-up. Enter the Gramm-Leach-Bliley Act, aka the Financial Service Modernization Act. Sounds boring. It's not. Stick with me. This was a law that said, hey banks, why live in separate houses when you can all move into one giant McMansion together? Before GLBA, U.S. finance was basically living under the Glass-Steagall Act from the Great Depression era. That law kept commercial banks, investment banks, and insurance companies in their own lanes. Like strict parents on prom, we've all been there. We all know what that's like. But in 1999, Congress swiped right on deregulation. Suddenly, banks could mix, mingle, and merge. Think of Citigroup, part bank, part brokerage, part insurance. Basically the financial Avengers assembling. And clearly Avengers Infinity War is the best one, so come at me if you disagree. But back to GLBA. Why does this matter? Because it changed everything. Mega mergers exploded. Banks got bigger, riskier, and way more complex. Cross-selling became the buzzword. Your checking account came with the side of mutual funds and maybe a little bit of life insurance as well. Tech adoption accelerated. These new financial giants needed systems to handle all of that data, which puts digital banking forward. It was the ultimate open concept design, great for efficiency, but also a setup for some messy drama to come. Spoiler alert, this cocktail of interconnectedness played a starring role in the 2008 financial crisis. Yes, the same law that made banks BFFs also made them too big to fail. So, November 99 wasn't just about Britney Spears and the dial-up internet. It was the month finance broke down its walls and built a mega mansion. And like any good reality show, the drama was just getting started. Until next week when you look at another November moment that proves history loves a plot twist. Back over to you.
Welcome back to the broadcast. You're watching Taking Stock here from the trading floor of the New York Stock Exchange. With the remaining minute or so we have left on this trading Tuesday ahead of the Thanksgiving holiday, we'll give you a quick wrap up of what happened across the major market indexes, as well as what to expect tomorrow on Thanksgiving Eve. The S&P 500 final tailed the tape, up 0.9%. The Dow 30 components up 1.4 off the strength of Goldman Sachs having a strong day. The New York Stock Exchange Composite Index up 1.3%, and the small caps roaring back to life here, up 2.1%. 6 of the 7 so-called Magnificent 7 mega cap tech stocks in positive territory, with the notable exception, of course, of Nvidia shares, trading down about 2.5% on the day, and the crypto majors continue to be in retreat, with Bitcoin down 1.2 on the day. Tomorrow, light on earnings for Wednesday ahead of the Thanksgiving Day parade on Thursday, but we do hear from John Deere in the morning. We're expecting to see earnings per share of $3.84 and revenue just shy of $10 billion for the quarter. That's going to do it for today's edition of Taking Stock. Have a fantastic night, and we will see you tomorrow. Woo!